In 1630s Amsterdam, a single flower bulb sold for more than a house. No one questioned why. The Dutch Golden Age was real wealth, trade routes, merchant fleets, colonial expansion. But beneath the prosperity lay something darker, an obsession with a flower. Tulips arrived in Europe from the Ottoman Empire in the 1500, exotic and rare. When a virus infected the bulbs, it created striped, flame-like patterns in the petals. Collectors went mad for them. What should have remained a curiosity became an engine of speculation. By the 1630, tulip trading had moved from gardens into taverns and marketplaces. Buyers and sellers never actually touched the bulbs, they traded futures. A rare variety called Semper Augustus might fetch an astronomical sum. Traders wagered fortunes on bulbs still in the ground, months away from blooming. The logic was simple. If the pattern appeared, the value would soar. If it didn't, the buyer lost everything. Prices spiraled upward. A single bulb of Viceroy tulip sold for the price of a grand Amsterdam townhouse, around 500 guilders in the 1630s. Weavers, farmers, chimney sweeps, ordinary people mortgaged everything to enter the market. They believed the trend would never reverse. Supply was limited, demand endless. What could possibly go wrong? Then, around 1637, the market fractured. Not dramatically, there was no single crash day, no panic. Instead, buyers simply stopped showing up. Prices wilted faster than the flowers themselves. Contracts were abandoned. Fortunes evaporated. Those holding futures discovered the market had no bottom. A bulb worth 5,000 guilders last month was worthless now. What happened next is debated by historians. Some claim legal chaos ensued, buyers refused to honor contracts, courts refused to enforce them. Others suggest the collapse was quieter, less catastrophic than legend claims. But the pattern itself is undeniable. Collective belief can inflate value far beyond utility. The flower remained beautiful. Its fundamental worth hadn't changed. Only human conviction had. The Dutch Tulip Mania teaches a lesson that echoes through centuries. It wasn't unique to flowers. It was the birth of modern speculation. Every asset bubble since stocks, real estate, cryptocurrencies follows the same arc. Scarcity creates desire. Desire creates narrative. Narrative detaches from reality. Prices rise on hope, fall on doubt. The mechanism hasn't changed in 400 years. The Dutch didn't invent greed or speculation, but they did pioneer the conditions for modern financial mania, futures markets, mass participation, and the separation of price from physical reality. Amsterdam's taverns were the first trading floors where ordinary people wagered on things they'd never see. The tulip was simply the vehicle. Today we have more sophisticated tools, algorithms, derivatives, global exchanges, but the human impulse remains unchanged. We still confuse rarity with value, momentum with inevitability, and collective belief with truth. The tulip bulb is gone, but its ghost still haunts every market that rises too far, too fast. Understanding how it happened is the first step toward recognizing when it's happening again. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe to explore more financial histories that shaped how the world moves money. There's a new story of boom, bust, and consequence every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research.